Good morning and welcome to GrainTV. It's July 30th, 2012. I'm Logan Burgess. To my right is my good friend Cody Bills. Well, Cody, let's jump into the fire tip platform here and see how the grains are reacting early on this morning. As you can see, we got corn up 18 cents on the old crop. New crop corn now north of $8 a bushel, trading at $8.12 and a half here. Right now we're looking at soybeans up 28 on the old crop, up 31 and a half on the new crop. Chicago wheat up 12. We have Kansas City wheat hanging in there, up 7 3/4. Kind of looking at the outside markets, we have crude oil backing off a bit. We have the dollar index recovering from a pretty sharp sell-off we saw last week. You know, as it pertains to these outside markets, keep an eye on, we do have the European Central Bank have a key meeting later this week, and we also have a FOMC meeting of our domestic Fed here Tuesday and Wednesday of this week. So those will all be important to the macro markets. Bottom line, though, weather is what's going to be driving this grain market. What are we looking at there?
Yeah, absolutely. Let's go right into what we saw over the weekend. Quite frankly, it wasn't enough to do any sort of significant damage to this drought. 0.35 inches throughout the majority. I mean, it was mostly less than 0.35 inches for the majority of the Corn Belt. The areas that did get a little bit more were in the north and the eastern part of the Corn Belt. We saw that last week, and of course we saw it on the weekend. Now, the big thing that's important to watch here is the forecast going forward. We're going to see some sprinkles in the eastern part of the Corn Belt. For the most part, though, not enough rain to significantly turn around this drought, and I think the market is trading that very much going forward. There's also some concern in the wheat complex. Russia has been having very dry, very hot weather, and they don't see any relief in sight over there for Russia. And that's important because there have been some market participants asking the question, will we see curbing of their exports, or even banning of exports like they did in 2010. We haven't seen any sort of signs of that, no sort of confirmation, and I don't think we're going to see any sort of confirmation until this weather event continues to erode the crop over there. But you know, the weather forecast the way it is, it makes these questions more legitimate.
Right, that's going to remain very important to the wheat complex here as the story developing there in Russia. If we kind of turn our attention, though, we will be getting some key fundamental news. We'll be getting crop conditions ratings this afternoon. The trade's expecting soybeans and corn to both continue to decline. We're looking for about a 2% decline on the good to excellent rating out of the soybean crop, and about a 3% decline on the good to excellent rating out of this corn crop. You know, if we take a look at kind of what we've seen over the last several weeks here, it's been very hot and dry in the western Corn Belt. We're expecting the majority of declines to be in that area, because if you actually look at the breakdown of where the good to excellent crop is, it's primarily in the western Corn Belt. You know, Nebraska right now, 37% good to excellent, Iowa 23% good to excellent. That compares to Illinois and Indiana, both sitting at 7%. So the eastern Corn Belt doesn't really have a good to excellent crop to give up at this point.
Yeah, and Illinois only has a good crop. They have no excellence. That, I think what you're saying is absolutely true. You know, the western part of the Corn Belt has area to give up. So.
Right. Well, with all we've kind of laid out here, Cody, what are you kind of looking at here, you know, over the next several weeks here for the grain complex?
Well, I think we have, for corn, we have seen significant demand rationing at the $8 price level. For soybeans, not so much. So I think soybeans could march higher, and it would fundamentally make sense. For corn, though, I mean, we're well over $8 now, and even before we got to $8, we're seeing rationing. You know, last week we saw export sales reductions in both old crop and new crop sales. Well, we may expect it in old crop because we're reaching the end of the marketing year, but new crop sales, that's a little bit of a surprise. So I think we're seeing rationing there. Ethanol production is at all-time lows compared to where we, you know, when we reported this, and I just see this as a significant demand destruction at these levels. And sure, we don't really know what we're going to get in terms of yield yet for our corn crop. But, I mean, if we go a lot higher, I think this is going to be, I mean, it is weather-driven. I think we could see outside markets drive this price higher, but I don't necessarily think it's sustainable. You're just going into way more rationing than the already significant rationing that seems to be occurring.
Right, absolutely. We'll have to keep an eye on that here moving forward. For anybody out in Indiana, Cody Bills will be on Hoosier Ag Today here this afternoon, so you can catch him there. I think that kind of wraps up our show here for Monday morning on GrainTV. Thanks a lot for joining us. Have a great day.